Good morning traders, welcome to this live currency strength indicator table video with me John on Friday the 27th of October. Here you can see we've had our tables here. There's lots of change overnight, so I've had to manage some of the positions that we were in. So I'm going to explain why I did what I did, and and then basically kept pound Aussie involved, and that one's in profit at the moment. So we're going to take a look at the tables here. Obviously says we should still be focusing on US dollar CAD. We spoke about dollar CAD yesterday. The problem with dollar CAD now is it's back at these kind of key weekly highs. We will go take a look at it. But for me now, the move may be done. So I don't know whether we're going to get that sort of pullback entry. On the slate today as well, we've got some dollar data. We've got core PCE price index year on year and month on month coming out at 1:30 p.m. So high impact data on the US once more. So it's going to be tricky to try and sort of trade that particular market. Aussie has come to the day traders table as the strongest currency. So that's why I'm happy to hold the pound Oz at the moment. Although pound doesn't feature here right now, I still think that the Australian dollar strength could push prices on that market in particular. Swiss franc has come up as one of the weakest, which is quite interesting considering on the trend traders it is S1 currently, so it's showing us that that strength or that underlying strength is not really there at the moment. That market is fairly weak. You can see that EuroCAD has appeared on the same side of the tables. That to me is a hard exit. I'm out of that market now just for a very, very minor loss. It was like 6 pips. And we'll go take a look at that and the reasoning behind why we got out of that move. But yeah, basically we've got the dollar as a strong currency, CAD as a weak one. So that's where we should be looking in the markets. But we're going to go take a look at some of the sort of positions that we've taken and how we've managed that. I was obviously short New Zealand US dollar. I've now come out of that. I did replace the order for a potential short move because for a brief moment New Zealand dollar appeared back on the day traders table. I have now since cancelled that order. So let's go over to these charts then and have a quick look at what's going on. So this is pound Aussie. I actually managed to move my order slightly, so I have got a different order on here at the moment, but that's because I was looking at a different type of entry. I ended up entering on this candlestick here. I have a tighter stop loss as well. That's only because price was going against our position. My original stop was literally above these swing highs in here, and that was where I was looking to kind of manage my position down towards this sort of low here, but I managed my stop loss. I saw price basically go against me initially. Thought to myself, well, if this isn't going to pan out, I want to be out early. So I've moved my stop loss above this swing high here. We actually held at that high there, and then prices continue to move lower. So I'm about 64 pips in profit at the moment. The original order was a break of this swing low in here. So if you are in there, you're about 37, 38 pips up at this moment. What I would like to see is price trade below this low so it can continue down to the next support point. I have just moved my targets inside this low in here. Obviously, this low on the 25th of October, very strong bullish move from there. I was looking at the daily chart and I like the idea of price coming down to the 189.25, but for me, I've actually just moved my target a little bit closer just in case we get that move today. Then I'm going to be looking essentially to sort of bank this hopefully today if price can continue to move to the downside. Next week, if we get another opportunity, then that's something we can potentially look into. But this zone down here is pretty much the one that I want to watch right now. I have set an alert just at that sort of zone high to see if we can get into there and see what happens at that point. So at the moment this is okay. Happy to leave this one. I'm not going to manage this position just yet. I was looking at the 30-minute time frame and thinking about moving my stop loss now to 1.9148 just because we've created a new low here at the moment. So technically price shouldn't want to make new highs, right, if it is going to continue to the downside. And that's why I was talking about in the Discord post. If you do have and you are linked to our Discord channel, I've gone into Discord and I've put in the pro trade calls and updates. the main reasoning why I closed some of the positions in here. So please go take a look at that if you do get a chance to. Obviously, I'll explain it in this video as well. But there was a lack of momentum on the other charts. That's why I ended up closing the position. So Kiwi dollar, we were in really good shape at one point. We were about 40, 50 pips in profit. Price then came all the way back. Now, I still like the idea of being Kiwi short from that sort of higher time frame perspective, but what really interested me was the daily close. Obviously, if I expect price to continue to make a downside move, I expect lower highs and lower lows on the daily chart, right? Now, we did technically get that yesterday. You can see this high in here is lower than this high. This low is lower than this low, but it did also form a pin candle. Now, pin candles are notorious for a different type of movement in the market. I'm not saying just because there's a pin candle, price is going to go against us, but today we've also had a break of the daily high. I shouldn't see those type of things if I want to be in a short market. Now, what I did was, because the New Zealand dollar did briefly come back to the tables, I was looking at the 30-minute time frame and I saw that we had a break below this low. So you can see there, that was the order. I ended up taking about 3 pips out of that. I did then replace the order. I placed a entry at 0 spot 5809 with a stop loss just above these highs to try and target these swing lows. But you can see price has gone against me here as well. So I think here at the moment, I'm happy to kind of sit out of this market, especially because of that daily close. I think it's quite easily to get sucked into the lower time frame here and watch the fact that, yes, we have a double top. Yes, we have price coming back towards the neckline of that, and it's finding a bit of resistance. It's quite easy to kind of just focus in on that. The daily chart is closed bullish. I don't really want to see that if I want to be short. Difference between that, you can have a look at pound Aussie here on the daily chart. We can see that yesterday we had a bearish close. Yes, we did get short yesterday, but that's because price is finding resistance and we breached trendline support. So there was different sort of opportunities happening here. Now, Euro Kiwi was something we traded this week. I ended up coming out of this one for break even as well. A bit unfortunate, really. I should have used a tighter stop loss to try and get towards those highs. Ended up coming out at break even. And yeah, this market has continued to push lower. Our original stop was below this swing low, so we would technically still be in this move. And if obviously Euro does take off and Kiwi weakens, then price could break higher. I have got an alert sitting above the 50 just in case that does happen. But yeah, there's nothing really here for me anymore, I don't think. Looking at the daily chart, we've just kind of gone sideways here right now. So I'm going to wait to see if this can develop further. I'd really like to see Kiwi kind of show some more confluence back on the tables if it can, just to kind of give us a little bit more of an opportunity there. So EuroCAD was another one we took a position in. I ended up going long here. I took a very small loss here. I was watching this morning and it kind of rallied again, and I thought, was that a bad decision to get out? But like I said, EuroCAD came on the tables on the same side. That's a hard exit for me. That means the market may start to begin to range, and that's pretty much what we had. When I zoom out here and on the 4-hour time frame, we are in a technical range there. I was trying to anticipate the breakout of this range, and for me, if the momentum doesn't take price in a direction where I want it to go, like fairly quickly, then I feel like maybe it's not something we should be involved in anymore. I would rather come out for very few small losses and break even trades before catching a potential move. So that's the way I'm kind of looking at this here. May have missed out on a move. Price may continue up and might want to try and break out. But at that point, I think we can obviously look to get back in if that is the case. So just watching that one as well. Dollar CAD starting to pull back now. What was interesting on this 30-minute time frame, yesterday we had a rejection and price rallied. Today we had a close below, consolidation below, and an attempt back above that level. Now this is where I said, this is the sort of target zone for us. If we go up to the weekly time frame and zoom in a little bit, you can see this one spot 38.50 zone, which forms from this sort of zone back here around about the 5th of March 2023. Those highs there are really significant in price because we've obviously fallen 600 pips from that point. So a very significant level in the market. I don't want to be long into that, okay? I want it to be long down here at the 137.50 into the 138.50 because we breached those highs. We closed above it on the daily, right? We don't have that now. Price has now come into that level and we've kind of retested that level. If we go to a hourly time frame, you'll see that although price may continue to push higher, we are starting to almost sort of make a bit of a lower high situation there. We could still obviously try and attempt another move into the high, but I would be seriously cautious about that because of the sort of area of where price is. I would have rather have tried to sneak an entry down here at the 137.50 with a move back to the upside there. So that didn't work out, which is absolutely fine. Again, not really rushing into anything there, just waiting to see how price reacts. We've got one position still open, which is this pound Aussie now, and it's obviously making the sort of right noises now. If I could have looked at this one a little bit differently, I probably would have gone down to this 30-minute time frame, and you can see I've identified a zone here where we've obviously had the price pull down, reject, come down, and we've got this high in there. So maybe an entry round here would have been a little bit better. I could have had a really tight stop loss. I could have maximized that risk reward ratio. Instead, I got a little bit spooked by this sort of candlestick in here, thinking that the sellers were starting to get involved here below that 50 moving average as well. So I ended up taking a short position, got spiked in. Price then rallied and before obviously continuing to the downside. But you're not going to get every entry absolutely perfect. It's just that looking back, that's what we probably could have done a little bit differently on this particular market. So just to kind of recap, Euro Kiwi, we're out of that position now. Kiwi dollar, we're out of that position. Daily charts aren't looking particularly great there. Dollar CAD would be sitting on my hands now because we're back at this weekly level of resistance, and Euro CAD we're also out of this move because of the tables suggesting that this market is no longer something we want to be entertaining anymore. So hopefully that all made sense. Thanks for watching the videos this week. I hope you caught some of these moves. I hope you got something out of them, even if I didn't. And then yeah, thank you.